So I have a strategy that I just discovered recently. I've been back testing it for all night, really. And today was a demo trade, but it's insane. I just had to take profit, so I was like, let me record this. I just finished some like this mentorship I just entered. I just finished it.
Smart
Let me see
idea.
if it's done. All right. Anyway, so I was looking at, and this is an insane strategy, honestly. I think it's one of the highest like percentage and great risk to reward. Anyway, I was looking at this. This is liquidity. This is liquidity. I'm waiting for it to get ran through this one already. But I entered in actually, and I know this is hindsight seeming, but this is actually true. I have some pictures, but I'm not gonna pull it out because I know it's real. I had this one and I had this one targeted because I don't like going too far, even though I know it's gonna run. But I got such a beautiful entry, and this is just the 5 minute because it's insane, this strategy. So I mean, today was just a great trading day, if I'm gonna be honest. Today was very nice, but I waited till like 1:30. Once I got home, I started watching, and it looks like chop, but it was a beautiful entry. But all I'm saying is that if you want to see a good entry, like if you want to see a solid entry for the AM session, then right now I'm gonna show you. I can start off with like a recap. All right, so first things first, we're gonna start off on the 4 hour. We had this imbalance, all right, and we had price push down extreme right here. This was all news, and you think when you're watching it, oh shit, it's gonna close below, break structure to the downside, and looking for shorts then. But I still knew that it was gonna be long. Here was the news candle at 10 a.m. There was PMI. You had this bullish fair value gap. And if you didn't trust in that, if you didn't trust in this up candle, what if it just formed this fair value gap? You could have waited till 12 p.m. candle close. This was complete confluence it was going to go up. You didn't have to enter in down here, but I would have. After it respected this fair value gap on 2 hourly closing candles, and in the 15 minute, it swept out this liquidity right down here. Oh, wait, I was looking at a different chart. I think it was on ES, the actual real chart. Yeah, on ES, it swept out that liquidity right there. And I was like, okay, now we're looking good. That's why you got to watch out for certain charts. ES is the best chart to trade on because it's futures. But the issue is on ES, it didn't respect the fair value gap. Some it did, but it still ended up playing off. 15-minute sweep, and I saw this push up. Saw this imbalance created on the 15-minute, but we never got a retestment. But on the 5 minute, we actually did. We had the break of structure right here. There was a break of structure here, and then a liquidity sweep, break of structure, tap into the fair value gap, boom, long it. And the long would have been underneath these lows, which is kind of a big stop loss, but above these highs you could have done. Or, and what I would have done, because I don't like big stop losses like this was already swept. We know it's not retesting this, but this fair value gap, the second it goes up here, like this, and you see it retest, so it retested this one as well. So honestly, you wouldn't have entered in right here. You want to see at least a candle close, or on the 1 minute, you want to see like more confirmation because it's been bearish. You want to see at least this break of structure, right? So let's say you get a bad fill, or not a bad fill, you just get a higher fill, right? And you fill there. Now, it's not necessary to really put your stop loss all the way down here. You could put it at the beginning of this fair value gap candle, or you could even put it right down here after it moves away. And yeah, it comes down, closes in this 1 minute, right over here. Can't see this one. Closes in that one, and then moves up. So it's either you could have entered in off that move or entered in off this move. After it broke structure, you know, we got the rebalance a little bit, push back up, sweep that, and then push into this fair value gap, and then it ran. And so you could have moved it all the way up to here, 1 to 9, which would be crazy. And if you didn't like that stop loss, a 1 to 3.52, which is still very good. But I'm in school most of this time, so I can't watch the market every single minute. So I still hit a 1 to 264 demo because I didn't want to live trade today. I felt like I kind of missed the whole good move here. Like, I feel like this was the move today, this whole thing, and I feel like it was a beautiful entry. Beautiful. This is exactly what you want to see as a smart money concept trader. Just this break of structure. And you know what made it even better was this inversion right here. Once this inverted, so if I had bar replay, I'd show you, but once this whole candle came up, these two candles weren't here yet. Once this candle inverted, you could just enter in off that, right? But obviously, a lot of people don't like inversions, so you could play off the fair value gap. It respects it, and then you go long. But the reason the inversion is so important is because it shows that you swept the liquidity, and it shows that the sweep of liquidity was valid because it disrespected a PD array, an opposing, or at the time, a supporting PD array in the price direction. So it could have swept this, came up, retraced into this one. It didn't. So you could have even taken it off of this inversion right here. You could have been like, oh, well, it swept the liquidity. If it wanted to go shorter, it would have went already. So it inverted there. Or you could have waited till this one. And it inverted there. It's like a perfect setup, honestly. But I would have waited for this so I could have a better order fill. And you could have even got filled here. You know, put it underneath this low. Because now this is the new fair value gap. And this is the new sweep of liquidity. And then you could have targeted, boom, all the way up there, all the way at the high. And the entry would have been at least at this candle or higher up this candle. Doesn't really matter. But that would have been a nice solid trade. 1 to 3. I'm going to show you how I did mine. Because I've been getting into inversion fair value gaps. So I'm not changing my strategy or anything. But it's just giving me like kind of another eye. It's like, okay, well, now I see that. Oh, I see that it breaks structure here. You know, it's just giving me another vision that, oh, also this one inverted, so it shows even more confluence. So inversion fair value gaps has been very helpful. I'll get into that right now. All right. Anyway, so you could also target these highs, but this setup usually works for like liquidity like this, like low hanging fruit, and then you can move your stop loss to break even after that. Target that other high. Anyway, let me just get into it because I jumped ahead of myself. Oh shit, I didn't even notice I was recording. Alright, so overall we were bullish on the day. We noticed, look, it's about to hit TP2. Yep, there it goes. That's how you know the market's algorithmic. Wow. Anyway, so we see the fair value gap on the 15-minute. We see it completely, and I know you guys are thinking, oh, this is the fair value gap or this is the fair value gap. You could this whole range could be just considered a fair value gap. There's an imbalance in all these candles. So it comes down, tests it perfectly, sweeps out the liquidity. On the 5-minute, you see the liquidity sweep, and you see this little fair value gap that it was respecting up until this candle closed. So after this candle closed, all of this was just bluff, knowing where it was accumulating to go long. This was all accumulation. Now that's the manipulation. Sweeping out the liquidity that I just marked. Anyway, I saw this liquidity sweep. There's no fair value gap here. But if you're on the 1-minute, I'm on the 3-minute. You could have waited for this one as well. But if you're on the 1-minute, it's a perfect setup. Singular fair value gap. This is gray and it's bothering me. Right? Singular fair value gap. And then it closes. Closes here. And then you got to wait for a retest. So boom, retest, got filled here. And then you long it up to here. So that's a 1.3, 1.29, whatever. But I marked this one out because it's an inversion. Now, if you were trading like this regularly, right? Trading with the regular concept, what makes this one so much better is that, okay, you get the sweep of liquidity, waiting for a break of structure, Then all of this runs. You get the fair value gap. You could get filled the same place, but if you're looking for a prominent break of structure, you're probably gonna wait till like up here. Fair value gap fill. This is all playing off of this. Tap, tap. This could have been your entry, another entry, another entry, and then you just run it, and now it's running. 1.3, and it's gonna hit this one soon. 1.46. You could, and the reason this gave me more confluence as well is because, first off, if we look at here, right? Let me just remove all this. So I don't really use SMT divergences or anything like that. I haven't learned that much about them. But all I know is that these actually play a role. And I was looking, this kind of has an SMT divergent from NASDAQ, which was like, I don't know if, yeah, so it was like this here, right? So you could do it like this. But I knew that it was going to run higher because the S&P and the NASDAQ, they go in the same direction. So this one can't be sweeping all of this. And these are my ultimate targets. But that's the reason it came up, swept this. Or no, swept that already, moved down, filled in this. But anyway, if I know this is sweeping liquidity, like it is, it swept these two. And then it came back down for more liquidity. And then it rallied up, inverted this fair value gap. So now this is an inversion. And we got liquidity above all of these highs. This was all engineered. All of these highs were engineered liquidity. Let me remove these because these were already swept. And these are hourly. And then you got this one right here. So I was looking. These were my targets, kind of. This is what it was. This is what I was looking to get filled and swept. That's why it was also such a high confluence move down here once you saw this whole thing. And it's weird because on the NASDAQ, on ES, it got swept. But on NASDAQ, nothing. Never swept. Just came into this fair value gap. And that was it. And then moved higher. So, you come. There was no sweep, but there was a sweep of this, I guess you could say. An inversion. And then it pushes. You never get a fair value gap fill until here. You could have got in right here. Went long. Underneath this low. Targeted like high here, high here. And I believe there was a, yeah, there was the setup on NASDAQ as well. Right here. When it swept liquidity. And everybody's looking at this like, oh shit, it swept it and then it like barely broke structure to the downside. Now you could be looking to take shorts off this. And that's how I used to think. Look, sweep of liquidity, break a structure, fair value gap. Uh-oh, you got shit on, right? And look, there it goes, running through all the buy side liquidity. Because the market's bullish right now. I'm not saying you can never take shorts, but I'm saying that this was clearly not reliable. Because look at all this. I mean, how are you gonna just instantly think it just rebalanced this price range? Why would it go again? What does it need to do this whole move for just to come back down? It's not necessary. And then you could go on a 3-minute, find a sweep. This one actually looks like it will stop you out on NASDAQ. So you could have executed on the ES, but not NASDAQ. Actually, no, it wouldn't have. I'm lying. Here, let me find the 1 minute. Oh, see, so there was no entry. That's why it probably came back down here. Because there was no inversion on the 1 minute like there was on ES. So you don't even got to worry about getting stopped out there. But what you could have done was go on the 3-minute, find the fair value gap. It's either the 3-minute or the 5-minute you could have done this on. Wait. See, NASDAQ wasn't a good entry because it just kept tapping and then it finally closed. Once it closed above it, this was the confirmation. Gave you a breaker structure. I don't know if it broke on the 5-minute. Yeah, it did break on the 5-minute. But you see there's no entry here. It just looks like chop. So you go to 3-minute. Boom. Beautiful. bang, long it, this high, this high, this high, this high, this high. Today was just a pure like if you look at it from a long run, right here, you got this, and I was looking at this last night. Even though this is gonna extend way higher right now, you got an accumulation, manipulation, and distribution. And let's see where that happens again. Look, accumulation, manipulation, so it could stop out retail, and it could and it could grab in its longs and its buys. So people are like, oh bro, but it broke structure and all this shit. Really, it just stopped out all the retail traders that are saying, oh, it just swept out this high, let's go long, right? Boom, put their low underneath here, put their stop loss underneath here, came into this fair value gap, accumulated, manipulated, and distributed to buy side liquidity. Now it just has to hit this one, and it has to hit this one. Same thing with today, accumulated, manipulated, and distributed. It's just been beautiful days, honestly, for any retail, any smart money concept trader. Anyway, that wraps it up. I'm tired, man. I gotta take a nap.